In my last video, we talked about 7 reasons to invest in Rivian stocks. Today, we are going to look at 8 reasons to not invest in Rivian stocks, so you understand the potential risks of investing in Rivian. Number 1. Increasing competition. Rivian successfully launched the first electric pickup truck in the world. But there is an increasing number of electric pickup trucks flooding into the market as we speak. The Rivian pickup truck with a basic battery pack is priced at $73,000. On the other hand, Ford's F-150 Lightning is priced at $56,000. And Chevrolet Silverado is expected to start at $39,900. Although the price is not finalized, Tesla is also launching the Cybertruck later this year with a shocking 1.3 million reservations. These are the competitions that Rivian has to compete against. Besides, people have been driving Teslas for over a decade. There is even a customer who drove his Model S for more than 1.3 million kilometers. Tesla has proven reliability, and people know what to expect from older Teslas. Whereas, Rivian is a new player with unknown reliability and battery degradation. When a customer doesn't know what to expect, they are likely to choose a brand with a proven record. Number 2. Production challenges. Rivian originally forecasted the production of 50,000 cars in 2022. However, they had to reduce the production number to 25,000 cars due to the global supply chain issues. It requires thousands of parts to manufacture one electric car. And Rivian sources components and materials from various suppliers around the world. If Rivian's supply chain is disrupted by natural disasters, trade disputes, labor disputes, equipment malfunctions, and other unexpected events, it could impact the company's ability to deliver its products on time and on budget. In fact, in March 2022, Rivian tried to increase the price of their pre-ordered vehicles. It was a PR nightmare, as a number of angry customers canceled their orders and the share price fell significantly. In October 2022, Rivian recalled 13,000 vehicles due to the loose fastener connecting the front upper control arm and steering knuckle. This defect separated the front wheels from the vehicle, which could cause deadly accidents. As you can imagine, this recall also negatively affected Rivian's share price. Being a brand new car company with new technologies, Rivian is facing several build quality issues. A professional detailer who had been washing several Rivians before pointed out that the alignment of panels got worse as the production number increased. If Rivian vehicles were to experience safety issues, it could potentially result in legal liabilities that could negatively impact the company's reputation and financial performance. Number 3. Rivian lose money on every car they sell. In the third quarter of 2022, Rivian lost $1.7 billion. If we do a simple math, Rivian is losing around $21,000 on every car they sell. In order to make profits, Rivian has to achieve economy of scale as soon as possible. Automotive industry requires high capital expenditure as making factories requires billions of dollars. It takes many years to research and develop new vehicles, and the margins are slim as there are many competitors. For example, Tesla recently decreased their sales price, causing their competitors to also reduce their prices. Tesla can still make healthy profits as they make high margins. But a newcomer like Rivian will have a difficult time competing against Tesla's low price tag. Number 4. Uncertain demand. Due to the war on Ukraine, inflation, and high interest rates, economic hardship is expected in coming years. During recession, people don't spend money on expensive items like luxury cars. The base price of a Rivian pickup truck is $73,000. For the SUV model, if you spec the largest battery pack and quad motors, the price tag can easily reach $100,000. As you can see, Rivian cars are not exactly cheap. The Biden administration has recently released the Inflation Reduction Act. This act gives price incentives to consumers buying electric vehicles. But due to the high price tag of the current Rivian models, Rivian cars do not meet the qualification. If the demand of the products falls short, the company's financial performance will be impacted. Number 5. Lack of charging infrastructure. Rivian calls their cars electric adventure vehicles. But in fact, their customers are complaining that they cannot take their cars outdoors as Rivian lacks charging infrastructure. Even if Rivian is willing to spend billions of dollars, building a charging network takes time and energy. It takes careful thoughts and negotiation with real estate and business owners to strategically place the chargers. Tesla took over a decade to install over 40,000 superchargers around the world. Therefore, Tesla owners can charge their cars seamlessly, knowing their cars will charge as promised. Whereas, Rivian owners heavily rely on Electrify America's charging network. They often complain that the charging doesn't happen seamlessly and takes longer than originally calculated. Simply put, Rivian's charging experience at Electrify America is miles behind Tesla's supercharging experience. This is why many Rivian owners claim that they are afraid of taking their Rivians for long-distance road trips. In other words, Tesla's supercharging network is acting as the company's moats, but Rivian does not have that moat to protect itself against competitors. If Rivian's charging infrastructure does not keep up with the growth of the electric vehicle market, it could impact Rivian's ability to sell its products. Number 6. Dependence on battery technology. Battery plays the most important role in determining the range and performance of an electric vehicle. That's why Tesla decided to mine their own raw materials and manufacture their own batteries with their secret recipes. On the other hand, Rivian buys batteries from Samsung SDI. This means Rivian production schedule and cost relies on Samsung's mercy. Furthermore, Rivian's innovation on their vehicle's range and performance is also dependent on Samsung's rate of research and development. Battery technology is the heart and soul of an electric car. If Rivian's battery technology falls behind that of its competitors, the company's sales performance could suffer. Number 7. Dependence on the success of new vehicles. The current lineup of Rivian vehicles are expensive flagships. Rivian strategically launched these vehicles in order to set the tone of the brand. The next models that Rivian is developing now are the less expensive, high-volume cars that will generate the most amount of revenue for the company. This strategy worked for Tesla, as they produced the expensive models first. Then start producing less expensive, high-volume models like Model 3 and Model Y. But we haven't seen the new Rivian models yet. Based on the current Rivian models, we trust that the new cars will also be compelling products. But if the new models flop for some reason, it would greatly impact Rivian's future. Number 8. Is Rivian overvalued? This is the golden question that everyone is wondering. Rivian successfully went public in November 2021. At the time, the company was valued at $86 billion and raised $11.9 billion. Since then, Rivian's share price tanked. If you invested $10,000 on Rivian stocks at the time of the IPO, your assets would have been reduced to $1,500. Experts argue that Rivian was able to receive high valuation thanks to having high-profile investors like Amazon and Ford. Originally, Rivian was in discussion with Ford to develop their new electric vehicles. However, when Ford backed out and sold the majority of their Rivian shares, the share price dropped significantly. In September 2022, Rivian was in discussion with Mercedes-Benz to develop and produce electric vans. Rivian's share price increased shortly, but as the deal was put off in December 2022, the share price dropped again. As you can see from this pattern, Rivian's share price is dependent on partnerships and investment of traditional auto giants. Providing the technologies and manufacturing EVs for third parties is Rivian's other business model. However, for some reason, if the deal breaks off, Rivian's share price suffers. For example, Rivian has a non-binding order of 100,000 electric delivery vans from Amazon. Hypothetically, if Amazon cancels the order, Rivian's revenue stream would suffer significantly. Many investors purchased Rivian shares expecting it could become the next Tesla. Building a successful car company is not easy, and it could be difficult for Rivian to meet growth expectations and justify its high share price. These were the 8 fundamental reasons why I think Rivian is a bad investment. If you have other reasons to invest or not invest in Rivian, please share them in the comment section below. This video is meant to help you understand the risks of investing in Rivian and save your time researching. Please note that the responsibility of your investment decisions are entirely up to you. If there are other stocks you'd like us to analyze, please let us know in the comment section below.